Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your client's money at the same time, it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hi guys, welcome to the Greedy Trader channel. Well, I'm not exactly greedy, as most of you old watchers of the channel will testify. I have the most conservative approach to trading. It's just a nice parody idea from the Gordon Gekko mantra. There are only two kinds of traders, the greedy ones and the fearful ones.
Greed, for lack of a better word, is good. Greed is right. Greed works.
Those of you who are new to the channel, this is where you can learn how to really trade like a professional. Every video I make is packed with real examples with before and after scenarios, so you can see that it is simply a question of sticking with the plan and not changing it because you're having an emotional meltdown. In this video, I'm going to explain the difference between market profile and volume profile. Most of the videos I've seen covering this topic are simply not explaining this correctly. This leaves traders with incomplete or inaccurate information as to the benefits of using a market profile. So I'm going to be giving you accurate information on the difference between market profile and volume profile, which is better to use. Volume profile is a data profile that is developed from any kind of volume source. This can be tick volume in the case of FX or real volume in the case of stocks and CME futures. This data can be displayed on the left or right hand side of your chart as horizontal bars in its aggregate or composite form, or it can be displayed and associated with a given period day session. For example, the idea of a composite or aggregated volume profile chart is to record volume in such a way that it is possible to visualize where trading has been particularly concentrated. This could theoretically suggest that a significant amount of orders were present and are likely to be present in the future. If price was to somehow go through this graphic representation of order clustering, then the trader can assume that price will continue higher or lower to the next cluster. If the volume profile is session based, it will attempt to give a visualization of volume as it relates to the specific session. High volume at the upper deviations suggests sellers and theoretically can result in price decline, and vice versa for high volume in lower deviations. Now that you have a better idea of volume profile, let's move on to explain market profile. Volume session profiles are wrongly referred to as market profile. They are actually very different in their function. Market profile is actually the trademarked version of Peter Stottlemyre's time price opportunity chart. So the name market profile graphic is just good branding. The real name is called TPO chart. So for the rest of this video, I'll refer to it as a market profile TPO chart to avoid confusion. Market profile TPO chart is a chart that takes price auction periods, in other words, any session period. This could be 30 minutes, 1 hour, or even 1 month. It separates these auctions by giving each auction period letters. For example, A period could represent the first auction hour, starting at 12 noon, ending at 1 p.m. This will be a 1 hour auction, and B period will represent the next auction starting at 1 p.m, ending at 2 p.m. These auctions are recorded till the end of a specific session period. This could be, for example, 1 day of 1 hour auction rotations. The data is then collapsed into a bell curve, giving a visual picture of where price spent the most time. This data is extremely useful. We know that price only slows down or consolidates at equilibrium. In other words, buyers and sellers are now in agreement of what is fair value to trade at. If the market imbalances from that area, then it's reasonable to assume with a high degree of accuracy that the imbalance is due to sellers overwhelming buyers or buyers overwhelming sellers. This will naturally suggest that the area this imbalance occurred will be relevant as an area that the imbalance inside will likely defend in the future. future. In other words, that is their cost basis level and hence a true representation of value perception. In other words, what is an expensive price and what is cheap? There is no other way to determine this beyond looking at actual transaction data. See my videos on level 2 data. So what is better? Well, they're actually supposed to be used together. However, I prefer to use market profile TPO chart. I can use it in isolation. It gives me statistical benchmarks like value areas and points of control. And if I really want to, I can attach a volume profile to any complete market profile TPO session. So all in all, I would say nothing beats a TPO chart. You can always let me know your thoughts in the comments below. So my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket. But if you can make your clients money at the same time it's advantageous to everyone, correct? No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?